Hello, this is the tradesight Stocks and Futures Index Market Preview and U.S. Economic Data Roadmap for the week starting July 1st, 2013 and ending July 5th, 2013. Charts as usual brought to you by eSignal 11. This is going to be an interesting week. There's a few things going on we're going to want to talk about here. We do have the 4th of July holiday on Thursday. It'll be real interesting to see how that throws sort of a monkey in the wrench, if you will. We've got the S&P chart right here, and we've been talking about this regularly now. We got a confirmed break of this long uptrend. We broke, we confirmed it, we turned back up, we retested, we've rolled over and really broke down, hit this static trend line as a target on the first day of that big move. And then as we came into this last week in what we call window dressing, and let's identify what window dressing is. Window dressing is end of quarter, sometimes happens at the end of a month, but definitely at the end of a quarter. A lot of funds have these stocks, they want to peg them at or near a certain price if possible, where they want the statements to print. And there's a couple ways to look at this when you've got the market in such a precarious state. Number one, if this break of the trend line isn't such a big deal, it could be that we just got a break here to get some lower prices. They might want to take the market higher from here. They wanted to make sure they got sort of a low print. That doesn't seem to be the better way to look at this. Of course, the better way to look at this would be that we've broken this key trend line and that they maybe held the market up for the last 2 or 3 days of the quarter to get some decent statement prints, so that if we do break down here, we've got all quarter for them to bring it back some, which will give us all some great trading opportunities, first to the downside, then to the upside. But either way, it does explain this week's action, which, as you can see, and we'll look at the intraday charts, was sort of a drift back up after this sharp sell-off the prior week. It's almost like, wow, look at this big break, look at this confirmed break, look at this this retest and the final confirmation, and look at the volume sell-off, and then, whoop, nothing to see here while we hold up the stocks for a week and have some very light volume this week. We averaged only about 1.45 billion shares on the NASDAQ, and the strongest volume day of the week was actually this Monday, which is the blue day down, the first day of the new option cycle, because the prior Friday had been expiration. So again, volume on the downward move, volume down on Monday to start the new option cycle, and then suddenly volume dries up and everything kind of drifts back up. We won't comment about market manipulation, but if you've been around long enough, you know how this works. That's kind of what that looks like for the week. So it'll be real interesting to see what we get here going forward. Now let's glance at some of the other key indices, and then we'll look at the intra-week action this last week, just so you can see the ranges and the gaps and some of the technical action that we saw. And then we'll also look at the economic data coming out this week and discuss sort of the layout of that. So here's the NASDAQ 100 daily chart. Again, it was selling off, got almost down to this red static trend line on the low, and then turned back up and got these sort of drifting higher days that we saw across the board. Here's the semiconductors. Not nearly as bad off yet, but you'll notice that they had a very critical, this was still hitting highs just the week before, even when the market was breaking down. Got a 13 sell signal on our seeker tool right at the high there. Pretty interesting. And then the biotechs, no signals lately, but they look more like the broad market in general. Just to show you a couple of stocks, here's Apple, which was under 400 again this week. Still targeting about 370 on Apple. Been that way for a while. I think there's a reasonable chance that that's coming soon. You notice that maybe we left a little gap back here in the middle of April. We might have come back to fill it, but I still think 370 or so is in the cards for Apple. Google, on the other hand, holding up nicely, giving a nice cup formation. Nice how the rally here led right to that static trend line of this 9-bar move down. Not the old highs, but the static trend line. That's real specific based on our tool. Amazon's still holding up here in general. Look at that. The pink line, though, is the risk line of this last 13 sell signal. And we've never gotten a close above it and then another day where you close above that day. That's what breaks the line. We haven't had that yet. It's using it as resistance. And also you'll notice that with this, we're now working on another 13 bar. We're on bar 11 with 2 bars to go towards another seeker count. So there's a lot of resistance up here on something like Amazon. Netflix is just hanging, but look at this, man. You break under that, you are in trouble for sure. So that's some of the bigger stocks and indices that we follow. Let's take a look at some of the action from the during the week. These are 15-minute bars: Friday, Thursday, Wednesday, Tuesday, Monday, and again, Monday was the bigger volume day of the week, which is a little surprising. What it means to me is usually you don't see volume on the first day of a new option cycle, but it looks to me like after the options expired, they were pretty quick to go out and buy some protection just in case the market broke down, and that might have been what held things up here intra-week. But you can see Monday we got the gap down, drifted up, Tuesday got a gap up. Never filled this gap on Monday right to this price right here. We did fill the gap from Friday's close right here. But keep that in mind. The 1566 area in the ES is an open gap right now. Another gap up on Wednesday and kind of a flatter action. The volume really dried up. Thursday was really poor in terms of the market. We had some nice stock picks ourselves, but just the sideways action was bad. Friday we had a gap down, and what's interesting is we then reached down and filled this gap right here from Wednesday's close, then went up, filled Friday's gap. So we got 2 gap fills done, and then that was it for the session, and it'll sell off here in the last 10-15 minutes of the day. Again, that doesn't bode well if they were trying to hold up some stocks and somebody knew that and they come in and sell the market off late, preparing for a rollover next week. So let's be aware of that. Now let's look at some of the other key futures contracts that we trade. Here's oil, first of all. Okay, just so you can see what oil did this week. It was up in general, closing around 96.50 in about a 3-point range. And here's the NQs. This is the NASDAQ 100. A little bit stronger overall, I would say. But again, sold off late in the day on Friday, and here's the Russell futures, also sold off late in the day on Friday. You'll notice that the Russell futures gave us a 13 sell signal right here at the high of Friday on the 15-minute chart, which is pretty interesting. So again, that's where we're at in terms of we had some window dressing, it looks like, to hold these stocks up after the critical break of the trend line on the S&P. Usually what you'd say is, okay, the window dressing's over, we come in Monday, boom, it's time to sell off. And traditionally, the start of the third quarter does get off to a bang pretty quickly. There are some caveats for this next week as to whether or not the move will start immediately or not. And the reason I say that is because of this goofy layout we have with the 4th of July on Thursday. So let's take a look at the economic data coming out this week, and we'll discuss sort of what this really roadmaps out to for our trading. So here's Briefing.com's look at the economic data. We've got on Monday, big number in ISM index, and then construction spending, both 30 minutes into the market, so going to be a little swing right around that time. Tuesday, factory orders, auto truck sales, not a huge deal. Wednesday, a lot of data. MBA mortgage index, challenger job cuts, ADP employment change, trade balance, huge one. ISM services, big. Crude oil inventories and natty gas, both on the same day because we're closed Thursday. It's a lot of big data, but people will be heading out. So there's going to be a lot of movement early, and people are going to be wanting to head out the door for a long weekend. And trust me, big traders are going to make this a 5-day weekend if they could. Or most of Wednesday, Thursday we're closed. Nothing going on Thursday. Friday, most of them will not come back. It is a full day so far. The markets have not declared a half day on Friday. It's kind of weird. It's like having a full day the day after Thanksgiving, which we don't do. But they have not declared anything. They can still change that, but right now they don't look like they're going to. So we come into Friday when nobody's going to be around. Volumes will be very light. We probably won't have much for stock calls for our report. We may be here in the lab in the morning. But initial and continuing jobless claims, usually a Thursday number. It's going to be Friday because of the Thursday holiday. And then unemployment rate with non-farm payroll, a huge number every month on Friday when nobody is around. That's very interesting. A lot of reasons in all this data for the market to do something if something misses or beats by a lot. 2 days where people might not be around much, and Thursday where the market's closed. So the question becomes, there's always the chance that the movement is to the upside still. As I said, maybe they sold the market off to peg these prices lower, but that seems less likely to me based on the technicals. But either way, if we're going to get a sharp move starting the third quarter, does it start coming out of the gate Monday? And if so, is it Monday, Tuesday, big down, or maybe big up days, but big down more likely? And then we come into all this data and Wednesday, but everybody's heading out the door. And what does that look like when there's nobody there to trade, and if the news misses or beats by a lot? It's going to be a little awkward. I mean, it's possible they just hold off until the following Monday to do much. But we're going to get a feeling here. A lot of times you see it right out of the gate in the third quarter. So Monday early on, by the time we get past this 10 a.m. data, 30 minutes into the market, we're probably going to have an idea of whether or not they're coming in to really get going with the third quarter right away or not. But Thursday holidays are weird. Can mess up most of the week. A lot of the big traders, they take that time as an opportunity to really have a long extended weekend. And I know I'm not planning on doing much Friday, but I will definitely be around for the morning, just because of how much data is out here. So that's our guidance and roadmap. We'll be in the lab walking you through it. As usual, we'll have all of our reports and calls as usual. If you haven't already taken a trial to tradesight, you certainly can. And we'd love to have you and answer some questions in real time during the day to walk you through how these markets work. But from a technical perspective, the market sure looks like it's holding on just barely, and it might have just held on only because of window dressing. So we could start to see that this week, and if not this week, the following week for sure. Have a great weekend, and have a great 4th of July.